Producer licensing requirements for the national portion of the life insurance exam start with the fundamental mandate that every candidate must be at least 18 years old. This age requirement is a hard line, and the exam often tests this through scenarios where a minor attempts to apply. Beyond age, you must complete a specific number of pre-licensing education hours. These hours are mandatory and must be completed through a state-approved provider before you are eligible to sit for the examination. A common exam trap involves the suggestion that relevant work experience or unrelated college degrees can automatically waive these hours. But you should look for the rule that state-specific pre-licensing education is a non-negotiable prerequisite. Once education is finished, you must pass the state licensing exam, which tests both general insurance principles and specific state statutes. Passing the test leads directly into the background check and fingerprinting phase. The exam focuses heavily on your character and financial integrity, so be prepared for questions about crimes that disqualify an applicant. Specifically, any felony involving dishonesty, breach of trust, or money laundering is a major red flag. While the commissioner has some discretion, a history of financial crimes often results in an automatic denial. After clearing these hurdles, you submit your application through the National Insurance Producer Registry, or NIPR. This is the central database used to streamline licensing across various jurisdictions. You must understand the distinction between a resident and a non-resident license. A resident license is issued by your home state where you live or maintain your primary place of business. You can only hold one resident license at a time. To sell insurance in other states, you must obtain a non-resident license. The exam will test the concept of reciprocity, which means that if your home state license is in good standing, other states will typically waive their exam and education requirements for you as long as you pay their fees. A helpful mnemonic to remember the standard sequence of licensing is Producers Earn Always Big, which stands for pre-licensing, exam, application, and background. This sequence is vital because the exam frequently asks which step must occur before another. For instance, you must have your license before an insurance company can officially appoint you to represent them. Another key time frame to memorize is the 90-day rule. If you move your residence to a new state, you generally have 90 days to notify the new state and transition your license from non-resident to resident without having to retake the full pre-licensing course. Always pay attention to these specific day counts in exam questions. Also be aware that the Department of Insurance reviews not just criminal history, but also any past administrative actions taken against you by other regulatory bodies, such as those for real estate or securities. Failing to disclose a past disciplinary action is often treated as a separate and more severe violation than the original act itself. Finally, keep in mind that the license application is a legal document where the producer is solely responsible for the truthfulness of all statements. If a question asks who is liable for errors on the application, the answer is the applicant, regardless of who helped them fill it out. This holistic understanding of the licensing journey from age to background verification is essential for navigating the complex situational questions found on the national portion of the exam.